Okay, so right now we are going to be discussing risk management. Now, often you will hear traders say, when you are applying risk management, how you should think of risk management is you should only want to lose a certain percentage of your account on each trade. Now, the problem with that there is, what does this say to the universe, to the world? What are you putting into your mind? Because we know forex trading is 95% emotional, which means that 95% of your success is based on you getting your mindset right. So what are you actually saying to your mind right now? You are saying that if I had $100 account, for example, and I was only willing to lose 10% on each trade, right? Now let's just say that, for example. What you are saying to the world is, for every time I place a trade, I want to receive negative $10. That is what you are saying. I want to take a loss of negative $10 on each trade. I only want to make a loss of negative $10. That is all I'm willing to accept. So it's going to give it to you. It's going to constantly give you negative $10. And this is literally what your account is going to look like. Now, let's step out of the spiritual way of thinking for a second and look at this practically, because, even though the mental way of thinking about this and the psychological way of thinking about this makes perfect sense, let's go into it practically so I can explain what actually happens. For example, if you have a triangle, now we know that triangles have a tendency of moving in their own ways. So you've seen this before. Your triangle will break out just a little bit and then come back in again. Now, your trade has been triggered, so you are in the market. But your negative $10 loss is somewhere random because you are only willing to accept negative $10. So this is your stop loss with negative $10. Now, from studying the market so far, what do you know about triangles? Just based on your experience on how they break out. Usually your triangle will break up back into your triangle, and then once it reaches resistance, it's going to come back down and complete your trade. But what has happened here is you have already been exited with a negative $10. Why? Because you have based your trading experience on, I want to lose negative $10. I am only going to accept losing negative $10. The most I'm willing to lose on my account is $10. But you are putting it into your mind that I am willing to lose. I want to lose. Lose, lose, lose. That is what you are focusing on. Whereas, if we had to erase all of this and think of it differently, if we had to think of it in a sense of, okay, I've still got my $100 account, but I am going to look at it in the sense of I need to have room for movement. So with my $100, with the lot size that I am trading, how much room for movement will I have? So I've got $100 in my account, and I am using a lot size of 1.00. How many moves can I make, or how many times can the market move against me before I am completely out of the market with absolutely nothing. Only 100 times, because it takes 100 points to take me out of the market completely. So I have got 100 moves with a lot size of 1.00. But with that same $100, if I had a lot size of 0.10, then I would have 1,000 moves before I am taken out of the market completely. Now that's not too bad. 1,000 moves, it's still a lot. But at the same time, we have to be realistic here. If you are trading a double bottom, if you are trading a double top and it failed and went against you after it triggered you, let's just say that the distance from the neckline to the head was 300 points, which is average for double tops and bottoms. You would then have to accept a loss of 300 points before you know that price is definitely not going back in your direction. Now, how much is a 300 point loss? Using a lot size of 0.10. So how you do this calculation is you say 300 times 0.10. You will get $30. That is a $30 loss on a $100 account. That is a huge loss. So your lot size is still too high. So you want to lower it a bit. Now, the calculation for how to check how many points you can move or the market can move against you before you are completely out of the market is you say $100 divided by, let's try 0.05. We don't want to go too low because then we're not growing our account. Let's check for a calculator. And then you just punch that into your calculator. You have got 2,000 points before the market moves against you. But at the same time, 300 times 0.05 is only $15. And on a $100 account, that's not too bad a loss, considering it that you could make it back depending on the currency pair you are trading. So this is how you want to think of risk management. You always want to ask yourself, how much room for movement do I have before I have absolutely nothing in my account? Sorry, that's just the platform reconnecting. Now, when you apply this risk management to your account, you always want to make sure that you have got room for movement and you are able to grow, but at the same time, you are not losing too much of your account on a negative trade. Because you need to be able to lose at least 3 out of 10 trades on your account without it really affecting your account or taking your account back too far. Now, I'm not saying 3 trades on that 100, because obviously you will still be making profit. Okay, so that is it for risk management. Remember, there is no right or wrong way to trade Forex, so you want to do what is comfortable to you. If you feel comfortable with taking higher risks, then take higher risks. It's who you are. But if you feel comfortable with taking lower risks, then take lower risks. Just make sure that whatever you do, you maintain your confidence and you remove all fear from trading Forex. That is the most important part. You need to make sure that during your visualization sessions, you are consistently thinking about how you are going to make a profit. Include this here into your visualization sessions, like picture the profits you are making, picture an overall amount. It's important for you to incorporate visualization into risk management as well. Okay, then let's move on to the next class.